Good morning, everyone. Allison Schaberg here, Consolidated Planning Group. We are here today with the Down Syndrome Association of Houston. Thanks for taking the time to join us this Saturday morning. So from a housekeeping perspective, I just want to talk a little bit. Your cameras and your microphones are muted, so we can't see you or hear you, but we do know you're there, so we're glad you're here. If you've got questions as we're going through today's presentation, if you'll just put them in the chat box, Kat is going to monitor the chat box today. We're going to answer any questions that come up. Today's meeting is being recorded, and following today's event, if not today, Monday, you guys will get an email with a copy of today's slides, so you don't have to write everything down. And then we actually also have a sample letter that we're going to share as well. So you'll get the recording, a copy of the slides, and the sample letter in an email as a follow-up to today's presentation. So to tell you a little bit about myself, if you're joining for the first time, I am Allison Schaberg. I'm a married mom to four. I have two kids with special needs, and I'm the owner of Consolidated Planning Group, which is a holistic special needs financial planning firm. We do a lot of webinars similar to this, all surrounding special needs and planning for special needs, kind of things that we need to keep on our radar. At Consolidated Planning Group, we are nationally certified as Social Security advisors and members of the Special Needs Planning Academy, and we can help people put protection plans in place, lifetime care plans such as how much is going to be needed when I'm gone? How do I fund? How much do I need for future care for my loved one? We do such things as transition planning, help people open ABLE accounts, and we and through our webinars, we just do a lot of advocacy. At the end of this webinar today, there'll be a link for our YouTube channel that'll be in the email as well. But we do have a YouTube channel, Consolidated Planning Group, where all of our past webinars live, so you can kind of peruse some of the topics. We have topics on SSI and Medicaid, special needs trust, guardianship, letters of intent, so many topics that surround our families and kind of the journey that we're on. So check it out, and you can look at those. There's no subscription fee or anything like that. So today, what we are talking about is how to save on medical expenses. And this is a topic that is near and dear to my heart. I have a multi-million-dollar medical kid. And so I, from a professional perspective, I eat, sleep, and breathe this, but on a personal perspective, it's the same. So we've had some interesting experiences along the way, and I know a lot of you have as well. So there's some things that we've learned along the way, and we really just want to share those with you to make your journey a little bit better when it comes to some of these medical expenses that we are often saddled with. So I guess I should start with a story. I think how I became such an advocate on some of this medical billing and debt and things is it's overly complicated. So, I have, an insurance and financial service background. That's what I do for a living, but most people don't, right? And so, really understanding things and what's going on. But the thing is when we're having these big medical bills and big medical, claims and stuff like that, obviously something big is going on in your life, and it is stressful. Sometimes something big that we have going on in our life has caused one family member maybe not to be able to work or has to step back or things like that. And so finances might be tighter than what they once were. But so what happened to me is my daughter was diagnosed with a critical diagnosis and was in the ICU. There was a life flight. There was a ventilator. There was a lot of stuff going on. And a few weeks, let's call it a few weeks to a month after that initial diagnosis, we got these big, thick packets in the mail of bills, which represented for the first basically 2.5, 3 weeks in the hospital, represented $250,000 that was not covered by our insurance. And so when you get something like that, it's pretty overwhelming. But trying to navigate that and figure this out, because honestly, we had more than one coverage. So there should have been basically, other than the deductible, everything should have been covered. And it was just one nightmare after another, lots of phone calls, lots of kind of being passed around to get it worked out. But as it turned out, they had basically, both insurances had denied all the claims because they hadn't established which carrier was going to be the primary and which carrier was going to be the secondary, and each carrier was requiring proof of the other coverage. And so we were able to get all of that worked out, but it wasn't that easy. It wasn't just one phone call. I mean, it was an absolute nightmare. And in between time, the facilities start sending you letters that they're going to send you to collections and all of these other things that they're going to do. So today what we're going to talk about is what if insurance is denying claims. So where do you start and what do you do when that happens? So first things first, it used to be that from an insurance perspective that they would mail you your EOBs, explanation of benefits. You got to know that name, explanation of benefits. Over the last several years, they've stopped mailing them. Most organizations have stopped mailing them, and you have a portal that you can log in and you can download and look at the claims and see how they paid, what was denied, etc. So you want to keep and organize your explanations of benefits. They can and do live in the portal, but if you're having a lot of the denied claims one, like for instance, I only download the ones that there's issues with. You're going to want to match your EOBs to facility bills. So whenever you start getting bills in the mail, oftentimes the bills that you're getting are wrong to begin with. They're wrong because the facility failed to bill the insurance, or they failed to bill the other insurance. Like for instance, a lot of our kids, if our kids are over age 18, our kids have Medicaid and oftentimes Medicare if the parent is already retired or disabled. So they may have primary insurance. They actually may have 3 different coverages, and sometimes the facility will only bill one, and then whatever the one healthcare company paid is, then they're going to bill you the difference instead of where they should have billed the other ones. So you want to look at the bill, and then you want to go out to your portal and you want to look at your EOB and see if it matches up. Does the EOB say, this is what you are expected to pay, and does that make sense? Oftentimes they don't match up. So you want to just look at those very, very carefully. And then the other thing is sometimes on the facility bills, like for instance, if the facility is in network, they can't bill you the difference. Like, so if, for instance, you've got an insurance carrier. Well, I won't name drop any. We know the big insurance carriers out there, health insurance carriers out there. But let's say that there was a surgery, and for example, the surgery, the maximum payment the insurance company will make is $7,500. But the bill was $14,000. If that facility was a network, they can't bill you the difference. Okay, so they have to accept the agreed price. Okay, if it's in network, where you start running into an issue is if the facility is out of network. Okay, so out of network, when we have that example that I just gave, they absolutely can bill you the difference. Now, the other thing that you have to know is sometimes there are facilities that are out of network that accept the in-network price. So they agree not to bill you the difference. So you might want to ask that, because I do know that some families do end up at out-of-network facilities because the specific doctor is specialized in whatever it is that you need, and that's who you need. And so just you can ask about that. We want you to keep a list of phone numbers handy to the facilities that you owe and the various departments of your insurance company as far as calling. So they have claims, they have, an 800 number where you can call and find out what the coverage will be for anything that that you've got coming up. I suggest always making a note of who you spoke to, the date you spoke to them, the number you called, and what did you guys talk about? What did they agree to do? What did you agree to do? And, where do we go from here? So, and this is true for both the billing facility, if you're calling a hospital or a clinic or anything like that, a lab, as well as true for when you're calling the insurance company as well. Okay. So talking a little bit more about the health insurance and why it is so confusing. So there's a lot of different types of health plans out there, and I know you guys know this. You might have a private pay health plan where you've gone out maybe to the marketplace and you selected a health plan during open enrollment. Coverage began January 1st. So that is an individual health plan. Then we have group health plans, and these are the plans that are typically provided by your employer that you sign up for. So first things first, you got to know if you have multiple health plans. And again, when we have, kids with disabilities that might be eligible for Medicaid or some of the waivers or things like that, you got to know who pays first. Because some families, they have, a married couple and they both work outside the home and both of their employers offer group health plans. And so sometimes people think, okay, well, we're going to have both of them because we have big care needs and we want, we would like to be doubly covered. And so while sometimes that works out and it works well, it actually depends. So you're going to have to do a little research on your end on which company is better and whose birthday is like, they have these little things like if you have two group health plans, which one is the primary payer? And they may say, okay, well, whoever is the oldest in the couple is who the primary payer will be. I've seen them say, well, whoever's date of birth is on the odd year is the primary payer. I've seen some of those things like that. But what you want to do is you want to make sure which one's going to be the primary payer, because if one of the primary payers is necessarily like better than the other, so that first primary payer is going to pay everything, and that secondary insurance is basically not going to pay anything because your primary insurance already covered what the other one would have. Okay. So in some cases it's better. In some cases it's not to have two group health plans. It's never an issue if you've got the Medicaid and the Medicare. And when it comes to our kids, we get questions all the time of, should I keep my loved one with a disability on my group health plan? It's a little expensive when they're already getting Medicaid and Medicare, or if they're getting Medicaid. And I think that the answer has to be very individualized to you, but my personal opinion is I like freedom of choice. I want to be able to take my kids where I want to go. I want to see who we want to see, and if it's the best specialist wherever, that's where I want to take them. And what I have found is the network with Medicaid is very narrow. The doctors that accept Medicaid is very, very narrow. So if you have specific doctors that you want to see, you may not be able to see them with Medicaid. Now, where Medicaid comes in that is good is, most of these big facilities are covered under Medicaid. It's those other doctor visits and things like that that you'll want to be considering. So what is your deductible? How does your plan pay? For instance, 80-20, 90-10, 100%. We want to think about what is the maximum out-of-pocket annual expense. So one thing that I want to talk to you about is because today, so we're in July, and typically open enrollment for most of our employers usually starts in the fall. Sometime between September and December is usually open enrollment for the plan that's going to start over in January. And one of the kind of misnomers with insurance is that if I have a kid that has special care needs, I should get the best plan that they offer. And a lot of times what people attribute the best plan to is the most expensive plan. Okay. The most expensive plan may have maybe like a lower a copay when you go to the doctor and things like that. So what I want to challenge you on that is when you look at this and you look at your open enrollment packets in the fall, I want you guys to look at the high deductible plan. A lot of people don't look at this, and I take this every single year because it's like the best deal on the planet. It's so cheap comparatively to the Cadillac plans that they're offering. And usually how this works is you'll have kind of maybe a relatively large deductible, say 5,000 to 7,000, okay, is your deductible. But basically, once you hit that, your plan goes to 100%. So for example, you won't have a copay. So basically, when you go to the doctor, you're going to pay the doctor visits until you hit that deductible, right? And you won't have a copay. You'll actually just pay for the whole visit. And some people don't like that. They would rather pay a $30 copay or a $50 copay for a specialist. But for us, and it just depends on your situation, what I know is that we can hit that deductible in the first month of our plan year, okay? And so my plan, going to 100%, one MRI is going to hit you in that range. So then what happens is all of your coverage is 100% for the rest of the plan year. So can you do that in the first month, the first quarter, the first 6 months? And if you can, that high deductible plan with an HSA may be the very, very best option for you. So, and we're going to talk more about that in a little bit, but you can really do this dollars and cents. And when one thing that I want to bring to your attention in the example that I just gave is that, let's say that a person has a chronic illness like cancer and they're going for treatment. Sometimes initial cancer treatments could be 3 or 4 days a week. And a lot of times if a person is going through something like that, they've got other issues going on because the treatment that is fixing the one thing is causing other problems. So they might be seeing a cardiologist and they might be seeing other specialists, a neurologist, all kinds of different things, different specialists. And so what my point is when you take that Cadillac plan that you think is the Cadillac plan, those all those doctor's visits, it could be $50 every time you go. Well, we experience this. And so sometimes we would be at the facility 3 times a week, but while we were at the facility, we would see 3 different specialists in one day. So the copay was $150 for the day. So anyway, I just want to give some examples like that. You don't know until you go down that highway and how it's going to work. So once you've met this out-of-pocket expense, the plan will pay 100%. You want to look at what does the plan cover, but more specifically, what does it not cover? If there is, depending on the condition or whatever that you're facing, one of the things that we had to look at was how does it cover a bone marrow transplant? And is it minimal coverage or is it really great coverage? Or is it something that is excluded? So that was something that was on our radar that we knew that it would, be a strong possibility that we would have to do that. So understanding what the coverage was going to be for that was going to be really important for us. So one of the things that has changed with healthcare as we know it since we've had Obamacare and some of the different changes to the law is whether or not there's a lifetime maximum that your carrier will pay. So years ago, that was a thing. A lot of carriers had a lifetime maximum of $1 million, and some of them were less. So we're not seeing those lifetime maximums anymore on the traditional health insurance, health plans, individual health plans, group health plans. But where we do see some of those lifetime maximums are with families that have kind of the medical sharing type of health plan. It's not a traditional health coverage. It might be like Christian MediShare or Altrua. There's some different health sharing organizations is what they're called. And a lot of them do have a maximum. So when you have a critical illness, it doesn't matter who it is in the family. And when you know that there's been a helicopter ride and you're sitting in the ICU and you've got all this stuff going on, that comes to mind really quick on whether or not there are any maximums and what those exclusions are. You want to also understand, does your plan have preferred facilities? Most of the health plans that we see nowadays on the group health side, you have a choice of a PPO or an HMO. And the PPOs typically have a broader network. With a PPO, the PPO is going to allow you to go to a specialist without having to see your primary care physician first, which is nice if we have family members with chronic illnesses and we all often see, very specific specialists. I personally don't want to have to go see my PCP, in which I know they can't help me and I know I got to go see the specialist. I don't want to have to go to that door first to get to the door that I want to go to. So if that's you, you probably are going to want to have a PPO plan as opposed to an HMO plan. An HMO plan, from that perspective, the network is usually a little bit more narrow, meaning that a lot of the doctors in the facilities that you might want to see may not be in network. So that's one thing to think about. And then the main thing with the HMO is that typically they require that you get that you go to that PCP first before seeing a specialist. You can't just call up the specialist and go. So another big thing on the insurance, and I will say that hospitals have been doing a much better job with this than they did previously. But does your plan require coverage to be pre-certified prior to services being rendered? And this is very, very common for radiology, such as MRIs, any kind of PET scans, any kind of big radiology bills, as well as surgeries. And so, again, the facilities have gotten a lot better at this, and they have departments that specifically call and get the pre-authorization. There has been times before where it kind of slips through the cracks, but you might want to stay on that as well, because if your health plan requires a pre-certification and they didn't get it, then they have the ability to deny the claim, and they often do. Okay, so employer-sponsored health plans. So we're going to kind of talk about that for a moment. So HSAs, FSAs, and other health plans. So in your open enrollment, oftentimes our employers are offering those health savings accounts, FSAs. I've also seen dependent care spending accounts, and these are pre-tax dollars that you can contribute, and they have a maximum that you can contribute. But if you know that you have a lot of out-of-pocket medical between copays, medical visits, just everything in general as it relates, and deductibles and things like that, I say max out your HSA. It's just smart money, okay? So one of the big things that I encourage people to do is to get your plan document. And I'm not talking about the slight little booklet that you get like during open enrollment. I'm talking about the plan document. All health plans have a plan document that goes into details of the services that are covered and an exclusions. And this is super important if you've got someone that has a chronic illness, or, they've got a lot of things going on and it's kind of questionable. You really want to look at this. But also what you want to do is look for things that contradict, for instance. I'll give you an example. So, years ago, we needed to save cord blood for a future transplant, and it's this big thing. Okay. So I look at the plan document, and the plan document basically said that under no circumstances would they ever pay for harvesting and storage of cord blood. And, but then later on in the document, it was like at one time they did do it, and then they changed and they decided not to do it anymore. But in the plan document, they forgot to take out the wording in another section in the document saying that they would cover that if in the event of medical necessity and there was a following diagnosis of A, B, and C or whatever, which we had. And so anyway, I was able, because of the plan document, now granted, they did change the plan document after me, but as a result of that, I was able to hold their feet to the fire and get them to pay for something that they weren't going to pay for because the plan document contradicted itself. Okay. So these are just real things, and we can help you with that. So, again, look into your HSA, and FSA is really going to allow you to save pre-tax dollars for medical expenses. Most of these accounts have a debit card, so when you go to your pharmacy or Walgreens or you go to your medical visit or whatever, you can swipe that card and pay for that instead of paying for it out of your regular checking account. But when you sign up for this, when you're looking at these plans, check to see what happens to the money left over in your HSA or FSA. Typically, what I've seen is the HSA, the money rolls over. Okay, so the health care spending account, if you have money left over at the end of the year, it rolls over. You don't lose the money. So that's typically what I've seen. But I've also seen that some of the FSAs at the end of the plan year, they do not roll over. So it's kind of like you use it or you lose it. So just pay attention to that because you definitely don't want to throw money away. So what happens? Your health insurance is denying your health care claim. So what do you do now? So first things first, one of the things that I share with people is don't put it on the shelf. A lot of times what happens is we're feeling a little overwhelmed. Life is hectic. The reason we have these claims is things aren't going perfectly, right? So what a lot of times people do, they start getting these bills, they start seeing that these claims are being denied, and they put it on the shelf of something I'm going to do when I'm not that stressed, or when I'm not frustrated, or when I'm not mad, or when I have a second. And then the second doesn't come. And then, basically what happens is you don't pay the bills, and if you don't pay the bills, then it goes to collections, right? So there are organizations out there to help you. So one of the ones that we like is the Patient Advocate Foundation. There's a lot of resources. There's an 800 number to call. And so they really do, they say they provide, patient services, eliminating obstacles and access to quality health care. And so this is a real issue. So don't be afraid to reach out to them. They're there for a reason, and they are a wonderful organization. But sometimes your claim is denied because your doctor filed the wrong procedure code. The procedure code was wrong, or it was a duplicate charge, or just something simple like I've had claims denied before because it was submitted by the physician, and then the insurance company sent a note to the physician saying we need X, Y, and Z, and the physician didn't respond. Okay, so those are all examples, and this is where you're going to see this in your portal. When you're kind of logging in to your health plan and looking at those explanations of benefits, and sometimes picking up the phone and calling them, which I know we all dread that because it seems like the hold times are long and you don't always kind of get where you want to go. So let's talk about the medical bills and kind of some myths that I know for sure that you've heard. So first things first, hospitals will never send you to collections as long as you pay something, okay? That's a big fat lie, okay? So the reality of it is the hospital/facility had to agree on the payment plan, okay? So again, that's one I've heard that for 20 years. As long as you pay something, they won't send you to collections, and it is absolutely not true. Okay. So this is where you don't put it on the shelf. You pick up the phone, you call their 800 number, you talk about the bill, kind of talk about what you need to do. So here's another myth. You should pay all the bills for your adult family member. Okay. So this is especially true for anybody that has kids that are over 18, they're an adult. There are a lot of financial assistance programs out there for the indigent. You're not responsible for their bills. So, as a parent, we handle a lot of things, we pay a lot of things, but there are definitely programs out there that are designed to help or waive off some of these bills. And again, when we have if your loved one is getting SSI and Medicaid, a lot of times Medicaid, even though Medicaid is always the last payer, a lot of times Medicaid is going to swoon in and pay some of the things that your other health plan didn't pay. Or if they're dual covered by Medicare and Medicaid, Medicare is going to be primary, Medicaid will be secondary, and there may not be a lot of extra bills. But just know that you can make these financial arrangements instead of unloading your cash to pay this bill. that there are programs for that. We're going to talk more about that as well. Okay, so working with the billing department. So this is where I just want to encourage you not to give up and not to put it on the shelf and not to ignore it, because it's going to hurt you if you do that. So some of these tips are going to just help you to navigate some of it. So we just want you to be an advocate for yourself and your loved one. Ask. If you don't know, ask. Always don't accept the answer that you're given is. Sometimes they're wrong. Ask again. Okay. So, if it sounds a little crazy or a little wonky, again, don't take that answer. So if you're looking at the EOB and you're looking at the bill, maybe they've billed you twice. Maybe you're being billed by a doctor. You don't even know who they are. Maybe they assisted. You had no idea that they were even in the operating room or things like that. There's a lot of that going on. So you got to ask those questions. So, and I want you to remember and kind of put your patient's hat on when you're calling these 800 numbers, that a lot of these people that are in these facilities are quite often working in a call center, and they themselves may not be able to give you the satisfaction that you're looking for, so don't give up. And so what I mean by that is they have a manual and they're allowed to do X, Y, and Z. And if what you're asking them to do is outside of the 9 dots of X, Y, and Z, they can't do it, okay? So, for instance, so here's an example of working with the billing department. So let's just say, for instance, that you just got a bill for $12,000, and you do owe it. You've looked at your EOB. You truly do owe this $12,000, and clearly you're not going to drop $12,000 and just send it off. You need to think about what it is that you want to pay on a monthly basis, okay? So these people at the call center, and it depends on which facility that you're dealing with, but they're mostly trained for 12, 18 to 24 months. So whatever the bill is, divided by 12 months, 18 months, or 24 months, that's the payment that they're allowed to set up for you, okay? So maybe that's still not affordable. So maybe you can afford $100 a month, or maybe it's $150, maybe it's $50 a month. I don't care what it is. Whatever your number is that you can comfortably afford to set aside month in and month out, that's what you ask for. And just know that that first person you talk to can't say yes. Okay, so you can ask to be escalated. She's going to say, well, that's actually the best I can do. And you're going to say, thank you. I totally appreciate your help with this. But actually, is it okay if you could escalate me to a supervisor? Because that's not what I could afford. I really need to set this up at this amount. And they're going to tell you yes, and then they're going to tell you that the supervisor is going to call you back in 24 to 48 hours. Most of the time, you're not going to get the supervisor right then, but most of the time, they actually do call you back, and the supervisor does typically approve your request for $75, $100, whatever it is that you want to pay. And then a lot of times, I ask for them, hey, put this in writing. Can you send this to me? And they'll say it's going to be in the bill or whatever. But you want to get, again, who did you talk to? What did they agree to? What are the details? One of the things that you're going to have to ask is, are you going to send me a bill every month? Because some of them won't. Some of them say if you have agreed to a payment plan that you just have to know that you have to pay it every month. Most facilities will send you a bill. So why? If you have a $12,000 bill and you have the money sitting in your savings account and you can absolutely pay this bill, okay, you're not indigent, you're not broke, you could pay this bill, why should you set up a payment plan? It's a question that somebody asked me. If you could pay it, why would you set up a payment plan? Well, from my perspective, if I have the money to drop the $12,000 check, well, I could, first, most of these facilities, I've actually seen one in the last year, but not in the greater Houston area. It was in another state, actually, that charges interest. These facilities do not charge interest on your medical bill, okay? They do not charge interest, okay? So when you're setting up this payment plan, it's not like like where you have a car payment or you have something else and you're being charged interest, and the sooner you pay it off, the better it is. Because they don't charge interest, your money, if you have that $12,000 that I was talking about, you can earn more then since you're not paying any interest on the money, why don't you make money on your money and pay them under this payment plan? So that's the idea. So that's one concept, to be thinking about, and it might be outside of the 9 dots of something that you've thought about before, but I'm definitely a proponent of that. So here's another thing that you should know, a little secret. A lot of these facilities have discounts available that if you pay it in full, I've seen them discount the bill up to 50%. 20%, 15 and 20% to 25 are pretty common. So this is, in fear of them not getting their money at all, right? You say, okay, well, I'd like to know a couple of things. I need to set up a payment plan, and what if I can get, if I could get the money, do you have a discount if I pay it in full? And what is that discount? So you can save yourself a considerable amount of money by just asking that question. And guess what? If you don't ask, they don't offer. The other thing is that, you just want to be informed of any not-for-profit organizations that specifically help patients with various diseases and conditions. Sometimes they also have small financial aid grants to applicants apply. We've seen this with a lot of organizations, all diagnoses, we've seen that. So it's worth it to look, whatever the diagnosis is, look, is there a not-for-profit? Is there a society? Is there something? And a lot of them will have some help for that as well. Okay. So one of the things I kind of talk about is that there's something called like a charity care application. It might be called a financial assistance application. Every facility calls it something else, but this is also something that you typically have to ask for. They typically do not put this application on their website for you to download at your leisure, but they do have a financial assistance application. Okay, so this is something that I recommend that you get. I don't care how much money you make or how much money you have. I don't care. It doesn't matter. I especially want you to do this if you have kids that are over 18 or a family member that's over 18. And even if you're looking at this financial assistance application and you say, there's no way I'm going to qualify, you got to go ahead and fill it out. And don't lie. Don't be dishonest. Fill it out honestly. But I suggest, filling it out and sending it in with a letter, explaining why you're asking for assistance, even though by their standards of what they said, you might not qualify. So when you're communicating with the facility, you're going to want to correspond with them. We want to correspond with them in writing. They must respond to all written requests, and then you have a paper trail. So it's okay to set up your payment plan. If you're going to do a payment plan, it's okay to set that up over the phone. But if we're doing the financial assistance requires an application. I always suggest a letter to go along with it. If arrangements were made by telephone, again, we want you to ask them to send a copy of what they agreed to in writing, so that way you have it in case something changes later. What I have seen is that basically if you, agree to a payment plan and you set this up with the facility and then you don't pay, then all bets are off. Okay. So you've got to do what you agreed to do. If you said you're going to send that payment in the first of every month, then you need to send it in the first of every month. Okay. And then another thing that you can do also, I just want to jump back to those payment plans, is say after a while, say maybe you've paid 6 months on your bill. You can call and renegotiate that payment plan again if you want to. And again, maybe you've paid it down for 6 months and maybe something's changed and you want to call back and say, now, if I pay it in full, what's the minimum that you'll take to consider this debt cleared. So just don't forget that you can renegotiate. You do not want these bills to go to collections. There is all kinds of negotiation and all kinds of great things that you can do with the facility. But once they've gone to to collections, it's too late to make the arrangements. There is no financial assistance application. They've sold this debt to a collection agency, and all they want to do is get the money. So this is why you don't want to put it on the shelf, and you don't want to ignore it to the point where it goes to a collection agency. So another thing is a strategy. Okay, so if you're applying for the financial assistance application, they will note your account that you have applied for the financial assistance. a lot of times the financial assistance, approval or denial will take 6 to 8 weeks. So they will mark your account that you have applied and flag it so they won't send you to collections during the time it's being determined on whether or not they will accept your request. Okay. So, and then I just want to say again, just be persistent in all your efforts. It is totally worth it. I mean, I, for one, felt really overwhelmed, like it's ridiculous. Like when you have a packet this thick of bills that they didn't pay, it's pretty overwhelming and thinking, okay, how am I going to look that many EOBs up? How am I going to match that up? I mean, it felt pretty overwhelming, but I mean, I'm happy to say that I have a multi-million-dollar kid and we don't owe anybody anything. And it's not because we're, super rich or anything like that. It's because we figured out how to play the game, okay? How to play the game, how to do it right. And in the end, I thought, okay, this is not going to happen to us. We're not going to have this chronically sick kid, crazy, expensive medical bills and all the stress that comes with, your sick loved one, and bad credit because we just couldn't navigate this. So that's, I just want to encourage you on all of that. There's a lot of help out there. And again, I also want to say that you're kind of learning the inside track because this isn't always on their website. Those forms are not on their website. You have to ask for the forms. So, let's talk about getting denied. So let's talk about that you make plenty of money and maybe the financial assistance, when you look at kind of the guidelines for that, you don't fit the criteria for the financial assistance. And so the first thing they do is they send you a letter and they deny you. So I think you should expect that you could get denied the first time. But what we encourage our families to do is to follow up with a letter. So first, when you submit your financial application, if you don't hit their 9 dots of how you should qualify, you need to tell your story. Tell your story of how you got where you are. What is your story? Is there multiple people in the household that are ill? Is this one of 10 different facility bills that you have here and everywhere all over town? Did your house flood in Harvey? What is the hardships? What is the reality of this situation? Did someone get laid off in the pandemic and didn't work for 2 years? You got to tell your story. Everybody has a story to tell. So this is where you're saying, hey, I know when I look at the criteria for the financial assistance that I may not qualify. I've provided all of this information in good faith, but I wanted to explain further why I need help. So you're going to tell your story in a letter asking for assistance. So today, I know this is small and you might not be able to see it, but we've got a little sample letter kind of walking you through what to say and how to say it. And obviously you're going to fill in your information. So even when you get denied, so the truth of it is, it's just like when you apply for SSI for the first time and, if people get denied for the first time, a large percentage of people, when they get denied, even though they shouldn't have been denied, a very large percentage will not go back to the well and appeal it. They're mad and they're frustrated and dealing with it is painful. And so they don't go back. So it's the same thing with this. If they deny the financial assistance, most of the people that get denied, they don't go back. Okay, well, we go back. Okay. And this is where you send a letter, the second letter, basically, that says, thank you for your communication. I recognize that my request for financial assistance has been denied. However, I think I may have not made my situation clear, and here is the situation, and I'm asking for any help. I'm grateful for any help that you can give. I would like to appeal your denial and request that the board review my request and let me know how that goes. So anytime that we've done this for a family and worked with a family, pretty much like I would tell you like 99% of the time, the second time it's approved. It's approved. And so what does that mean when it's approved? It means I've seen $150,000 bills wiped out to zero. I've seen $50,000 bills reduced to 10. I mean, I've seen everything all across the board. So all I'm telling you is it is totally worth it for you to do it. You do have to put a little effort in. You can hire us. We can help you do that. But you can do this. I like to put tools and resources in people's hands so they can do it themselves. You know, you don't have to pay us to do it. You can totally do it. So you just have to have a little patience and a little persistence, and it's totally worth it. Now, you're also going to want to follow up with these folks. So if you send your financial assistance application, you haven't heard from them in 3 or 4 weeks, you're going to follow up with them. Don't just let it go to the abyss. The facilities have been pretty busy. They usually do a pretty good job. They have been behind. I've seen crickets where they never responded, but just a simple phone call, calling back and getting the matter escalated, speaking to a supervisor can make that go away. So today, the sample letter, we are going to give you a PDF of the sample letter so you can see it up close and personal, and then you can kind of create your own off of that template. Okay. So we're still okay on time so far. So we're going to be ending right at 12 for anybody that is keeping track of the time and getting your day started. So let's talk about taxes. So, you know, a lot of times, you know, people talk about, well, can I write this off on my taxes? Can I write off special needs school, you know, private school, things like that? Can I write this off on taxes? So you got to, you know what a deductible medical expense is and when to use it. So generally, medical expenses need to be more than 7.5% of AGI to be able to write it off on your taxes. So we've had some serious medical expenses, and I would say that we've been real close to the 7.5% of AGI, but we typically do not hit that. Most of the time, from a private school perspective, that private school is not going to be covered. We have seen examples where the private school is mainly an ABA school, so they're getting therapies, and we've seen some of that stuff covered. Not all medical expenses are deductible. Your alternative medical procedures, like you know, hypnosis and I don't know, some of the different ones that are considered alternative medical, they're typically not covered. So you just want to keep those receipts. You know, this is kind of old school. I know a lot of people, you know, kind of do, you know, everything digitally, and you definitely can. But I would just, when we were at the height of big, you know, medical crisis stuff going on, I just got like 12, you know, 8.5 by 11 envelopes, and I just labeled them January through December, right? And each month I just threw our receipts in each of those envelopes, so that way I had them organized by month. And I still kept those receipts because you never know. I mean, things changed quick at our house. So I was always thinking that we would hit that 7.5% of AGI. So just keep that in mind, but do keep track of that. And that is also helpful too, where, you know, you're looking at your EOB, you paid your $50 copay when you went to the facility, the EOB shows you didn't, or the facility bill says you didn't, but you actually had the receipt. I've had to get those types of things fixed before as well. Okay, so deductible medical expense definition. Okay, so from the IRS Publication 502, so that's the code that you can look up. Medical and dental expenses, the cost of diagnosis, cure, mitigation, treatment, or prevention of disease, and the cost for treatments affecting any part or function of the body. Okay, it does not include expenses that are merely beneficial to general health, such as vitamins or vacations or things like that. And it does not include services and treatments from a holistic practitioner, including those who are not licensed or certified in your state. Okay, so some of the homeopaths or naturopaths and things like that may not be covered. So kind of look at that from that perspective as well. Some of the things that we've seen before, like sometimes our families, we have caregivers. We might have caregivers in the home or things like that. So a lot of questions that we get are, is a nanny covered or is a caregiver covered? And the answer on that is always, it depends. We do suggest that you talk to a tax person on that or a CPA on that. But in general, when it comes to a caregiver, if the caregiver is licensed, if the caregiver, is an LPN or an RN or things like that, then that could be covered. But your general babysitting, nanny, type of services are generally not covered. Kat, do we have a question?
Yes, ma'am. Let's see. Does the cost of insurance per month be considered in the 7.5% of AGI?
That is a good question, and I am sorry to say I do not know that answer, but I actually think the answer is no. So I'm gonna say that's a good question for the CPA. I know that like the expenses, like what the insurance paid doesn't count. It's what you had to pay out of pocket. But actually, I'm going to try to get an answer on that. Actually, I just cannot remember the answer to that. If the premiums, if we can count the premiums, but you just can't count what the insurance paid specifically. So I will get an answer on that. That's a good question. It might be something we could Google. Kat, why don't you Google that right now and see what you find on that? I bet you it's out there. I always say, forgive me, but I am not a CPA. I'm not a tax accountant. I'm not a CPA. I don't even play one on TV. I hire, a CPA myself that handles those types of things. So we don't go deep and wide on tax code and stuff, but want to give you enough just so you can understand, the typical deductions and things like that. Okay, so is the treatment, so not every medical expense is deductible. Is the treatment or service covered by the definition of a medical expense from the previous slide? Do you have a prescription of the medical condition from your physician? Do you have a receipt or a statement from the treatment or the service? There are other requirements that these are the first steps to getting your expense deducted. And a lot of things that you've got to know are like procedure codes and, the NPI number for the doctor is one thing that is, having that and having procedure codes and all types of things when we're working on things or getting things reimbursed or what have you. You're going to want to make sure that when you have these bills, that you're getting one that is a complete bill with the procedure codes on there. Okay. All right. So we've kind of come around the bend. I'd love to take, any additional questions that you guys have. If anything, what I just want to say is don't be discouraged. Don't do what other people do and ignore this because it just starts bubbling up and everything rolls downhill from there. So don't ignore this. You can do this. There is help out there. There are solutions. And then also, one of the things that I also want to mention is don't forget other plans that you might have. Like sometimes employers have accident plans, hospital plans, cancer plans, things like that. Be aware of those plans that you have out there because sometimes there's like claims for diagnoses of things or sometimes there's even coverage for just regular screening for certain things. So don't forget those things. Those are things that you don't need it until you need it and you forget that you have it, and we don't look at those types of things. So just be encouraged and know that there's help. Like I said, you're going to get these slides and you're going to get a letter of how to communicate with the facilities and things like that. But from a perspective of what we do at Consolidated Planning Group, again, we talk about, we're a holistic special needs planning firm. The things that are on the screen right now are things that should be on your radar. If you have a loved one with special care needs, these are things that should be on your radar. We have webinars on every single one of these topics. And as you guys know, life is sometimes complicated for all of us. And some of these topics are a little bit complicated, but we, in our webinars, we break those down. We make it simple, easy to digest and understand, and really try to equip you with the tools and resources you need to be successful on your journey with your loved one. We can definitely help you, develop a comprehensive special needs care plan. And, like I mentioned earlier, kind of developing those future care cost estimates for families that are saying, hey, what is going to happen to my loved one when I'm gone? How much money do I need to set aside for them? how do we maximize benefits from Social Security? Well, this is a big deal for parents who have a child whose disability started prior to age 22. Guess what? Our kids can be covered under a parent's record for Social Security purposes. So when a parent retires or becomes disabled, your disabled adult child can be eligible for 50% of your Social Security benefits. So, for example, in the event that your Social Security benefit is $3,000 a month, your child, when you turn that on, will be eligible for $1,500. Okay, if they're disabled. So basically, if they're getting SSI right now, they're getting $841 a month. You retire, they're going to flip over. So we have specialized software that helps us tell you exactly when and how to pull the trigger on your Social Security right down to the month. And it's going to show you in dollars and cents how to maximize these benefits for your entire family. So it's just really important to look at that. Know about the Texas waivers and interest list. We do have webinars. We have webinars coming up on all of these topics, but we do have past webinars on our YouTube channel that you can listen to as well. So just put these on your radar. And if you don't know about some of these topics that are on here, just, make a note to stop by our YouTube channel, check them out, and, listen to the ones that might be most relevant to you. Okay, so Kat, looks like you found an answer to our tax question. What did you find out?
Yes, so it looks like you can, and that there are a wide variety of other options you can have counted as well. So I put the link in there because it has a very detailed list of what can and cannot be accounted that way.
Yes, for sure. There is, I will just mention this for somebody that is looking, there is a CPA in the greater Houston area. Her name is Teresa Ferruzzo. And she is nuanced in working with families with special needs and kind of this healthcare stuff. She's one that we have referred to in the past. So if you're feeling like you need some help in that area, reach out to Teresa Ferruzzo. You can Google her and you'll find her. I think she's 2 R's and 2 Z's when you're saying Ferruzzo. Okay. So anyway, I always just like to take a moment. We've got a staff here, not pictured as well, but I always want you to meet our team. Sometimes I do the webinar, sometimes Michelle does the webinars, but we work as a collaborative team at CPG, and we are, again, nationally certified as Social Security advisors. So you got those tough questions on some of the things with, SSI and Medicaid and some of the other coverage that you're dealing with. We can definitely help you in that area as well. So it's certainly been my pleasure, being here today with you. I've got our YouTube channel on here and our Facebook page. If you've got, personal issues that you don't want to put in the chat box, we certainly understand, but we're happy to meet with you. We always offer a free personalized consultation. So if you have additional questions and you want to reach out to us, you can just take a picture of this and it'll go to our calendar and you can pick a day and time that might work good for you for a Zoom meeting where we can chat further. So as always, Kat, it's been wonderful to partner with you again, and we look forward to connecting again. And again, for everybody that took time out of your Saturday morning to be with us today, we're certainly happy that you came by, and we hope that you'll attend some of our webinars in the future. So thanks so much. Take care, everyone.
Allison. We appreciate it. Thank you.
All right. Have a good one. Bye now.